Hey traders, Raghee here, and you might want to grab a pen and paper. I think you're going to really like this video because I'm going to walk you through how to basically see into the future. I'm only being slightly facetious. We're going to walk through the NASDAQ today, and I'm going to show you how to project range extreme highs and range extreme lows using a free tool that we use every day in the chat room. And let's start off with it right now. So the tool is called Auto Chartist. Now you can get this through many brokers, or you can download a free version of it at autochartist.com. It gives you a live version of it for 2 weeks, and then it will actually revert to a delayed version, which is absolutely fine to use for what I'm going to show you here. But if your broker does offer it, support Auto Chartist. I'm a big believer in what these guys do. We have no affiliation with them, with Simpler. This is a tool that I've been using for well over, this Auto Chartist suite, for well over 10 years. I know the guys who run the company. They're great guys. It's a tool that I use all the time. Let me give you a quick tip. Just make sure when you go to the select your broker part of this login that you choose I do not have a broker. I can't tell you how many times I mention this, and inevitably someone will choose a broker. Do not choose a broker. Otherwise they're going to direct you to that broker for the service, and you won't use the direct one that I use. You can also pay for this. We'll talk about that at another time. Again, I am not affiliated with them. Neither is Simpler. It's just an amazing tool that is free that I'm going to show you how to use right now. So the NASDAQ started selling off today. So the first thing I do is I go ahead, and if I'm not already logged in to my Auto Chartist, I log in and I head on over to the volatility analysis, and I take note of what the NASDAQ's hourly price movement range and daily price movement range highs are. So the time of day this sell-off was happening, the price movement range was between, on the upper end, I'm looking at about, you can see here, the sell-off was happening around 11:30, around 21 to about 29 points. So this is 29 up here. This is 21. Now this is the kind of movement I would expect on a 60-minute chart or less. It's about 60 minutes or less. Okay, so I jot those two numbers down. I also want to keep in mind the daily price movement range for today, about 60, call it about 66. Okay. So with these numbers in hand, as the market is selling off, and you've got to be prepared for this, these numbers aren't always a steady, they're not always going to move around. They're not steady and fixed forever, but they do change very gradually. So you don't have to always go back to it. At some point, you'll just commit them to memory. So the market started melting down, and I was in the chat room while this was happening. So I was walking the folks through this live, and we basically calibrated to the range extreme lows at the time, 59.83 to 59.75. Well, the market looked for a few moments like that it was going to hold that area around that 59.75, and then it broke down again. And of course, that's where a lot of times the real panic sets in. And what we're trying to do here is avoid the panic. When this doesn't hold and you get this momentum, well, what's next? Now, if you were short, you should actually think about taking something off the table here. But what about the second level? What about where does this move ultimately end? So once we exceed the hourly, we move on to the daily. So that means I go to the daily time frame and I grab the current high that we had on the market. Now, I got to mention that before the day even began, I had told traders in the Simpler Futures trading room that we are at an overbought level in the laggard market that we have. Nikkei is not a laggard. Dow, not a laggard. S&P, all those are in different variations of uptrends right now, not the NASDAQ. So this is an overbought, oversold conversation. So I've got to tell you, the speed of the weakness, the velocity, that's the unknown. But the fact that we exhausted here cannot and should not really be a surprise. So we take the high, which was 6,009.75, and we subtract that 66 points. That lands us at 5,943.75. So again, take the high, 6,009.75, subtract the 66, that lands us down at 59.4375. Today's low, 59.5850. So the thing to remember about these kinds of moves is making sure not that you're always able to predict where the market's going to stop, but you can at least predict a range, and you can prevent from bailing on longer term positions that you might actually want to hold. The 5-minute might have shaken you loose, but once it does that, you recalibrate to a longer term time frame that can absorb not 21 to 29 points, but 66 points. And where do we get this? This is a very easy thing to identify. This area here. In fact, I could have easily also, I went right to the extreme. What if we went ahead and subtracted only, look at the average there, 54. Where does that land us? 54 points. I think you're going to love this. So your range first was 21 to 29 for the hourly. The hourly numbers get blown out the window. Next we do is we recalibrate to the daily price movement range, go to a longer term time frame. These are things I teach day in and day out. It's just a series of questions and then a sequence that follows, right? What are the numbers? And then what's the sequence? I mean, so much of my trading is just numbers and sequences, right? That's the matrix of following this process. So I step out to a longer term time frame. Now, if you subtract 54 points from the high, you land at 59.5575. That's really less than 3 points away from the low we put in today. So if you know the market could go to 59.5575 and you see a 180-minute or 120-minute swing by, which is exactly what we got at both these, and you know that the market could exhaust or absorb this kind of correction, you get long. You get long, right? That's the punchline, I guess. You get long. So I hope you watch this video. It's a little bit longer than our normal videos. I know it ran about 7 minutes here, but this is how you look around corners. This is how you predict the future. And I'm not predicting the future, right? I'm using a 68% probability of what happens in this market. So there's a certain repetitive nature, and I trust them. And the more you use these and the more you crunch these numbers, again, numbers and sequences, the more you do this, you'll find out just how easy it is to shift gears to a different time frame, the one that can absorb the velocity, can absorb the volatility, and then you just rebuild another trade. I'll see you in the next update.